Welcome back. I'm Pratap here. Today is 31st March 2024. In this video, let us analyze NIFTY 50 in detail with the help of supply-demand zone chain. Supply-demand zone chain is a feature in the NeoStock software. So even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply-demand zone price action. All the training videos are available at our NeoStock YouTube channel. I kept all the videos in a playlist supply-demand zone price action course. Even I have provided the link to this playlist in this YouTube video description. So go to the YouTube video description, click the link, and then you will get into this page. Then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply-demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be helpful to you. Each time when we release a new video, we will provide an update in the channel. Now let's get into the analysis of NIFTY 50. So let's start our analysis from monthly time frame. Even before that, what is the main goal of this analysis? To identify what are the support levels and resistance levels for NIFTY 50 for this upcoming week activity, and also on Monday what could be the trading levels we can identify. So this is the monthly chart, NIFTY 50s. So here we can draw a zone, rally 1, 2, 3, 4 base candles, and a rally candle and a follow through candle. So this is the monthly zone. I'm changing the color to monthly demand zone. See here, this monthly zone is having EMA confluence, monthly EMA confluence, and moreover there is a overextension is also there. So suppose if this overextension has to be completed on monthly time frame, the prices should come down to 19,700 level. But there is no rule that this overextension has to be completed immediately, because lower time frames there will be strong support and resistance levels with the help of our supply demand zones. They will not let the prices come up to this level. That possibility is also there. That's why we are analyzing up to 5 minutes time frame. So this is a monthly demand zone. So let me give the text as a monthly demand zone. Now I am changing the time frame to weekly time frame. If you look into the weekly time frame, we have a drop base rally is created during this week. Look into NeoStock software. This is the recently created weekly demand zone. During this week it is created. That's why yet to confirm the strength of this zone. Next week activity will tell how strong this zone is going to be. But anyway, this is the immediately available zone we need to identify, and moreover, no supply zone is available. So this is going to be an all-time high demand zone because there is no supply zone. This demand zone is an all-time high. Even monthly demand zone is also an all-time high monthly demand zone. Even weekly demand zone is also an all-time high weekly demand zone. So let me change the color to weekly demand zone. So let me add the text. So definitely there could be strong order flow will be there. But to confirm whether there is a very strong order flow or not, what you need to do? You need to fine tune up to 5 minutes. You should identify a fresh fine-tuned 5-minute zone inside this weekly zone. If you can able to find, definitely it will hold the prices. You have to do this work. This is an exercise for you. You know how to fine-tune the zone. I clearly explained in lesson 16. And every day high liquidity zone analysis videos I've been talking about fine tuning. Based on that only we are trading in high liquidity zones. So same thing you have to apply, same technique you have to apply even for Nifty 50 also, to check the quality of this weekly demand zone. And moreover, see the EMA, weekly EMA. Weekly EMA is very close. That means very soon, probably the next week, this zone may get EMA, weekly EMA confluence. But now it is very close. Almost it is able to get, or it is about to get weekly EMA confluence. So definitely, EMA point of view, this zone is having some importance. But how strong this zone is, that you have to understand only after doing fine tuning this weekly zone. So please remember it. Okay, now let's move on to the next time frame, daily time frame. Let us generate the chain, daily chain, supply demand zone chain. So even before it generates, let us change the time frame to daily. See here, what happened during this week? From this zone here we have a bear trap here, bull trap that pushed the prices during last Friday. And here we have a supply zone is there, but that is pierced, high liquidity supply zone. This drop, base drop is pierced, so no more it is valid for us. Actually, you can consider rally base drop. Why software did not consider? The leg out is not good enough for software point of view, because software is very strict. The rules are very strict. Narrowly it missed. But human point of view, we may accept. There is nothing wrong. So human point of view, we can draw the zone like this, a supply zone. So this is the daily supply zone. Our software expected this leg out should be a little more higher, little more. But we can ignore that little more and we can take a decision. This is the advantage of doing manual way of analyzing sometimes. We need to mix anyway. I am taking care of that while doing this analysis. See from this area how it got the rejection. And this is high liquidity, drop, base, drop. This is a pierced. And here we had a 5-minute zone that acted as a bull trap and pushed the market down. That is what happened. But the bull trap is also slightly pierced during last Friday, because such a strong order flow is there last week. But anyway, Institute consumed all the demand. They consumed whatever you are selling, they consumed in this bull trap area at 5 minutes. Actually, it is not 5 minutes, 15 minutes. The 15 minutes, the bull trap area, it consumed all the order flow. Whatever you are selling, everything it consumed. And finally, it pushed the price down. Sorry, actually, it's not whatever you are selling, whatever you are buying. Whatever you are buying, that everything consumed. With shorts, that is what. All the shorts pushed the prices down. This is what happened on last Friday. That's why we got such a huge week. Okay, now we have here a pierced supply zone, but still we have drawn this daily supply zone. The reason is inside you may find lower time frame zones. So this is the immediately available demand zone, daily demand zone. Let us draw that. This is on 22nd March, 2 base candles. This is 22nd March, 2 base candles and a rally candle. And this is a daily demand zone, which is part of the weekly demand zone. See the zone confluence. Daily demand zone is inside weekly demand zone. Maybe inside this daily you may find a 75 minutes or 125 minutes zone. If that way, if you can fine tune inside up to 5 minutes, then this zone will work as a very strong zone. Even though this is a normal zone, not a high liquidity, but still it works very well. If you fine tune up to 5 minutes level, and if you find fresh 5 minutes fine tune zones. Those who are not aware of how to fine tune a zone, please attend lesson 16 from our training program. You have 2 videos in that. You have to complete both the videos. Okay, now the daily level we have identified. Any more daily demand zones inside this? We have 12 to 2024. So here we have a daily demand zone. This is overlapped with this. So that means it picked up the orders from here and pushed out the price. So they created a strong demand here. These are all normal demand zones. But where is the high liquidity? Below that we have, this is 12 to, this is what we have drawn just now, 12th February leg-in. We have high liquidity zone, but this is pierced. So we don't bother about this. The next high liquidity is very far. That is on 29th at 20,000 level. Now market is at the close rate at 22,000 level. So that means it has to down by 2,000 points to get into the next high liquidity level. So this week we don't expect that, definitely not. So now let's move on to the next time frame. So changing from daily to 125 minutes, I am generating the chain. Meanwhile, I will change the time frame here on the charts. Still it is generating. Okay, now it's ready. So what is the immediately available demand zone and supply zones? That we will look into that. So this is the immediately available supply zone. This is immediately available demand zone. The good thing is both are high liquidity zones. This is a high liquidity zone and this is a low priority high liquidity supply zone. But this is already pierced. So because it is pierced, we don't bother about this zone. So we can consider this is the all-time high 125 minutes demand zone. You ignore it because it is pierced. It's not valid. Pierce zone purpose is different. Pierce zones will help us identify the traps above that. I already explained some couple of months back about how to use pierced zones. If anybody wants to, having interest, and if you want to watch the video, please search the video in a playlist, terminology of NeoStock. We have a playlist. In that playlist, you can search for pierced zones. Then you will get that special video. But we will draw this zone, immediately available demand zone, when it is created on 27th March 9:15, 2 base candles. Probably inside. 27th March, these 2 base candles and a rally. So let's draw this zone. This is a 125 minutes high liquidity demand zone. Observe here, a part of this zone is a little above this, another part overlapped with this zone. So it is having zone confluence. It is within the weekly zone, within the daily zone, overlapped with. So it is a fine-tuned zone, comparing from weekly time frame. And it is also having one more zone here, maybe drop, base, drop, let us see, below this. Is our software recognized? Yes, 25.1 we have 9:15. No, not this one. Maybe software would have considered rally 1, 2, 3, 4, 5 and rally, because this rally candle is part of this zone. It did not consider this. So manually when you do the advantage, sometimes you can compromise and you can take. Software consider this as a base candle. I am considering this is a leg candle. A little compromise. This is the way I can draw. See, my ultimate goal is not about this 125 minutes. My ultimate goal is inside fine-tuned zones are there or not. That is the way sometimes as a human we compromise and we can draw the zones. Anyway, I am not drawing because we focus in 75 minutes. This is good enough. This is high liquidity zone. So supply zone is pierced, so I am not drawing that. And we have a high liquidity zone at 10th. 30.11 at what level? 20,000 level. So it's very far. Time being I am ignoring. But remember, I am showing you all these levels. Still you have the chance to draw all these zones in your charts. And you can further analyze. But here my goal is not drawing all the zones. My goal is just to identify the immediately available support and resistance levels. That's it. That is the goal of this analysis. And within that support and resistance levels, you may get several trade opportunities. That you need to find by fine-tuning the zones. Because you already learned that concept. Okay, now 125 minutes is finished. Now let's move on to 75 minutes zones. So generating the chain. Before it generates, let me change the time frame here, 75 minutes. Okay, zone is ready. Now what is the immediately available demand zone? It is also not having any supply zone. We have a low priority, high liquidity zone is available. We have 27.3, 9:15, 4 base candles. 1, 2, 3, 4 base candles rally. That means same zone. This is 125 minutes high liquidity demand zone and also 75 minutes low priority high liquidity demand zone. Low priority high liquidity demand zone. So I have drawn this. I have added the text. Okay. And what else we have? Any fine-tuned here below? Let us check. 26.3, 9:15, 4 base candles. See, 26.3, 9:15, 4 base candles. This is the reason why I avoided 125. 125, it is like compromising and drawing the zone, but now this is a perfect zone at 75 minutes level. And moreover, 75 is the one we mostly use compared to the 125 minutes. This is a fine-tuned zone. Again, inside you need to fine-tune 15 minutes and 5 minutes to identify the real order flow. That you have to do. This is not a high liquidity demand zone. This is just a fine-tuned demand zone inside daily demand zone. See, if this level is violated, then Nifty will pick up the orders from this area and again push the prices. In case, if you have fine-tuned 5 minutes, inside 75, 15 minutes should be there. Inside 15 minutes, 5 minutes should be there. If it is there, that is called fine-tuned. See, last week or before, I think before last week only. If I am wrong, before last week. Yeah, last week we have only 3 trading sessions, right? Yeah. Before last week, we have fine-tuned bank nifty zone. After that, bank nifty gave from that fine-tuned area, it gave 800 points move. That is the power of fine-tuning the zone up to 5 minutes. Inside daily 75, inside 75 15 minutes, inside 15 5 minutes. That is how you need to fine-tune. Or if it is a 75 minute zone, inside 75 minutes 15 minutes, inside 15 5 minutes. If you can find, that is fine-tune. And that fine-tuned zone should be a fresh zone. This concept I clearly explained in lesson 16. With examples I have explained there. That is the main success for our trading. That is the way we identify, we confirm there is institutional order flow is there. Okay, this is good enough for you for the demand. Supply, just ignore it. The same thing you can consider, inside daily 75 minutes is there. We have a leg candle, 2 base candles, drop candle. That way you can assume. This is also a 75 minutes fine-tuned zone. So time being it will work as a resistance, this supply zone. Once this is violated, prices will go to the all-time high. So now let us move on to next time frame, 25 minutes. So changing the time frame to 25 minutes and I am generating the chain. Before that, here also let me change the time frame. Still it is processing. Yeah, it is ready. Chain is ready. See, here also there are no supply zones, 25 minutes. So what is the high liquidity zone here? The third one is high liquidity zone. So on 26/3, 14/15. 2 base candles. (26/3, 14/15). (9:15). So I am considering this is a drop base rally. This is the way I draw. So this is a 25 minutes demand zone. This is a fine-tuned inside. Maybe the same could be 15 minutes also. Let us check that. This is a 25 minutes high liquidity demand zone. See here, 125 minutes is a high liquidity demand zone. Inside we have 25 minutes, 75 minutes is low priority demand zone. Again 25 minutes is high liquidity demand zone. So a strong order flow is created here. And moreover, pro gap area is here. You should not forget there is a pro gap. Okay, fine. Now 25 minutes. This is the only high liquidity. Remaining here, rally, base, rally, all these things are there. You can ignore this. Moreover, it is pierced also. You need not worry. Both are pierced zones. And below you have another high liquidity demand zone tested once. This is on 23. Where it is? 23. 20 March. 13:15, 4 base candles. So this is the one. This is a 25 minutes high liquidity demand zone. See, from here order is picked up and our daily zone is created. Weekly zone and daily zone all created from here. So this is the main source, a very important zone. This is the main source behind creation of weekly zone, daily zone. holded the prices, then created this entire zone. Probably this is the daily zone. Inside weekly 25, this is the one created this daily zone, and inside this daily 75 minutes zone is there. Okay, fine. This is the only thing about 25 minutes. We don't have supply zones. Now let's change the time frame to 15 minutes time frame. Let us generate the chain, changing the time frame to 15 minutes. Here it is 15 minutes, we have a high liquidity supply zone and we have a low priority demand zone. Low priority, high liquidity demand zone, not low priority demand zone. That is a wrong word. This is a high liquidity zone, but among high liquidity, this is low priority. It doesn't mean it won't work. Sometimes it will work very well. Sometimes at present software identified, sometimes what happens, low priority, high liquidity zones will be, over a period of time, they will be converted to high liquidity also. That possibility is also there. Because algorithm lands based on the price action. Initially it may identify low priority. Certain conditions, certain price changes, all these things algorithm will recognize every time. The moment it may feel now there is enough high liquidity is there, then it will change it to high priority, high liquidity zone. So all those things will happen in the coming days, future. But at present it is a low priority, high liquidity zone. Low priority, high liquidity zone is better than normal demand zone. Normal demand zone means by default any demand zone is a normal demand zone. Because I remember someone asked me, what is the difference between normal demand zone and high liquidity? By default, any demand zone is a normal demand zone, but software algorithm performs certain checks. It's a complicated algorithm. And if those checks are satisfied, then it confirms that is the area more order flow will be there, institutional. The moment it identifies more order flow, then it will indicate that demand zone as a high liquidity demand zone. That's it. By default, normal demand zone or high liquidity demand zone, they are all our supply demand zones, concept demand zones only. Whatever you land in phase 1, phase 2, based on the concepts, everything is a demand zone. And just comparing where there could be higher chances of having more order flow, institutional strong order flow. That confirmation is done, then software done, then it identifies as a high liquidity. Again, it is within high liquidity, based on different algorithms, it will give prioritization. This is a high priority, this is a low priority. That all I will explain in lesson 21. The third phase of your training program, the first lesson, I will explain everything in detail. I won't get into the algorithm levels, but for your trading point of view, how you can make use of the software and get better profits. That is the goal. Some people are always asking, without software I want to identify. That is not possible. Only if I reveal my software algorithm, then you have to write program. That way you can find, which I don't want to do. Because certain software secrets I cannot reveal. So the immediately available demand zone is 26th March 1430, 3 base candles. This is the one. This is a high liquidity demand zone. So 15 minutes, low priority, high liquidity. So inside 75 we fine tune to 15 minutes. But here also we have another This is the 25 minutes demand zone. Same thing you can draw. You can consider this as a drop. You may ask why software did not consider this. Maybe it is expecting more length. Maybe it might be having a little less length compared to what we are expecting. That could be the reason. But still, we human, we can compromise sometimes. Slightly we can compromise and we can draw the zones. Because here pro gap is there. This is the demand zone. You can also call it as a 15 minutes. This is anyway 15 minutes high liquidity demand zone. And you can call this as a normal 15 minutes demand zone. But what is the real challenging? Inside 5 minute zone is there or not? If it is there, it is a fine-tuned 5 minute zone and that should be fresh. Next time prices enter, definitely we get a good trading opportunity. Okay, here we have a high liquidity supply zone is also there, created on last Friday. I'm sorry, Friday is a holiday, right? Last Thursday. So 28th March, 14:15, one base candle. This is the one. This is the candle. So what we can see, software consider this is a leg-in, maybe because its body is more than 50%, but definitely it is less than 75. When the body is less than more than 15, software generally it is having a choice to consider either leg candle or base candle. Either way it takes. But here we have a clear leg candle. So that's why what I am doing, let me consider both and draw the zone. Anyway, let's give, because software performs a lot of volatility related checks also. So better we draw. This is good enough. This is a 15 minutes. High liquidity supply zone. I will give a little light color because 5 minutes later we need to fine tune inside. Minutes. High liquidity supply zone. Okay, fine. So this is the level we identified now. Definitely there is a strong order flow because see the push on Friday. So a lot of order flow is there inside this. So we have a range now from here to here. Next range is from here to here. That we discuss once we get into 5 minutes. So let's get into the last time frame, 5 minutes. Let us generate the chain. And meanwhile, let me change the time frame here. This is a 5 minutes level. Okay, chain is ready. So what is the immediately available demand zone? The second one. Below we have a high liquidity demand zone. And here we have a resistance supply zone, high priority supply zone, high liquidity. So 28.3, 14.35. This is the one, 28.3, 14.35. Here we have the real order flow. This is the one we are looking for. Perfect order flow, institutional order flow, this one. This is a supply zone. This is 5 minutes, high liquidity. So it's a perfect. See here, let me show you. We have a daily time frame. See here we have a daily supply zone, rally base, drop. Even though the leg out is not very great, Still some more. According to the software, some more length should be there. Maybe up to here length is there, it would have considered. Slightly it missed. But manually we are compromised. Compromised means we are convinced. Compromised is not the right word. Convinced is the right word. We convinced. Okay, rally base, okay, this is okay. It is slightly less, okay, not a problem. It can be acceptable. That way we convinced. So we have drawn this supply zone. If I draw wick to wick, it will be like this. So inside this, we identified a 75-minute zone. So where is the 75-minute zone? Here you can consider this as a ERC candle, 3 base candles and drop. That way you can consider 75-minute zone. Then your zone will be like this. So this is a 75-minute supply zone. I am explaining you the fine-tuning the zone technique. Let me repeat again. Now we don't require to draw. Now you have a clear understanding. Those people who are not aware of fine-tuning the zone, I am explaining. It's very important. First you are going to the daily time frame. In a daily time frame, you identified a zone, rally, base, drop. Inside daily time frame, you should identify 75-minute zone. See here, you have a 75-minute zone. This I am considering as a ERC candle, as a leg-in. You have 1, 2, 3 base candles, and again you have a drop candle. So this is a 75-minute supply zone. Inside 75 minutes, you should identify a 15-minute zone. So now I am changing to 15 minutes time frame. See here. So in the recent price action, we identified a 15-minute zone. This is a leg-in, this is a base, and this is a drop. Rally base drop. This is the 15 minutes. Where is this 15 minutes? Inside the 75. Let me draw up to type 2 proximal. You get clarity. Exactly. See here, you have a leg-in, base, drop. Now inside this, we have a 5-minute zone. Inside 15 minutes. See, this is a 5-minute zone. You have a rally candle as a leg-in, you have a base, and you have a drop candle. And you may ask a question, can we draw drop, base, drop? You can draw, but this is not a fine-tuned zone. If you draw like this, you can draw, but this is not a fine-tuned zone. Institutional real order flow will be there in the fine-tuned zone. Then what is this zone? This is an aggressive zone. Without fine-tune, if you want to trade, some price action clues should be supported. Otherwise, this zone will be violated easily. Or if this zone, we don't want this zone to be violated, institutions should create this zone as a high liquidity zone. High liquidity zone need not be a fine-tuned zone. But fine-tuned zones are having more success rate. Let us assume fine-tuned zone is having a, let us say, a 60% success rate. Let us say. If it is inside high liquidity zone, the fine-tuned zone is inside fine-tuned means I am talking about 5 minutes. If the 5 minutes fine-tuned zone is there, inside high liquidity zone, the success rate is 80%. That is what we proved. That is what we are discussing in everyday high liquidity zone videos. We have 80% success rate for all those zones. The fine-tune, let me repeat, the fine-tuned 5-minute zone is inside high liquidity daily zone or inside high liquidity 75-minute zone. In either conditions, the fine-tuned zone is having 80% success rate. So that means during the intraday, it will give a trade without fail. And target also up to 15 minutes target. Your entry is at 5 minutes, but your target is 15 minutes level. This is what we are doing for last 6 months. That is what every day we are discussing in high liquidity zone analysis videos. The daily videos. But this zone is not a fine-tuned zone. This is there directly inside daily. And such kind of zones, mostly they will be violated. And if you want success to this zone, it should have been a high liquidity zone. High liquidity need not be fine tuned. At least it will be having a 55% success rate. 55% success rate will be there. And fine tuned zone will be having a 60% success rate. If the fine tuned zone is inside a daily or 75 minutes high liquidity zone, that is having 80% success rate. So please remember these points. So I am deleting this because this is not a fine tuned zone. $14.45, do you have any? Yeah, software is not recognized. I know the reason. Because for 5 minutes and 15 minutes, I am expecting a bigger leg out candles. Small leg out candles. This is actually a valid leg out. But I have given more range. There are reasons. Because 15 and 5 minute zones, when I give such kind of use, we get more targets and more success rates also will be there. Basically, I am looking for only candles having high explosive candles. That way I am considering. And the next high liquidity zone is the third one. Have we drawn this? 27.3, 15.15, two base candles. This is the one we didn't draw. See, this is also a fine-tuned zone. We have a 75-minute zone. See here. First let me draw and I will show you. This is also a fine-tuned zone. But this fine-tuned zone is a high liquidity zone. This is a demand zone, 5 minutes, high liquidity demand zone. And your fine-tuned zone is a high liquidity demand zone. The success will be even more. Definitely it is up to 65% success will be there. If 5 minutes is also high liquidity zone. Suppose if this 5 minutes fine-tuned 5 minute zone, high liquidity zone is inside daily high liquidity zone or 75 minutes high liquidity zone, probably it is having up to 90% success rate. Generally fine-tuned zones inside daily 75 minutes high liquidity zones we have 80% success rate. But that fine-tuned 5 minute zone inside daily or 75 minutes high liquidity zone, whatever you fine-tuned 5 minute zone, if that is also high liquidity zone, then your success rate will be more than 90%. But this is not inside a 75 minutes high liquidity zone. But 75 minutes high liquidity, low priority high liquidity. 75 minutes low priority high liquidity zone, I am not claiming 80% success rate for the fine-tuned zones. I am not claiming. Maybe it might be having a 60% success or 55% success. Okay, now let me explain how we fine-tune this 5 minute zone. Let's go to daily time frame. Not only daily, here we have a weekly zone. Inside a weekly, we have a daily zone. We have a drop, two base candles, and a rally candle. This is what we identified. So this is the daily zone. Actually, up to here, I have drawn up to week, it seems. Let me extend to week to week. So we have a drop, two base candles, and a rally candle. Drop, base, rally. This entire thing is a daily zone. So inside this daily, go to 75 minutes time frame. So here we have a rally, 1, 2, 3, 4 base candles and a rally candle. This is a 75 minutes. This 75 minutes is there inside daily. This daily is there inside weekly. There are two daily zones here. This is one daily and this is one more daily here. I'm sorry. This entire thing is daily. The biggest problem is the text overlapped here inside this zone. Actually, this daily demand zone text would have been there outside. You won't be having confusion. So what I do, let me put it, yeah. See, now text came out, you will get clarity. Now inside this daily zone, you have two 75-minute zones. This is one 75-minute zone, and this is another 75-minute zone, and moreover, this 75-minute zone is a low priority, high liquidity demand zone. The same you have, high liquidity is also there. The same 125 minutes high liquidity. Now let's go to 15 minutes time frame. So in the 15 minutes time frame, see here we have a 15-minute zone here. We have a drop candle, you have a base candle, you have a rally candle with hidden body, with pro gap. This is the 15-minute zone. Inside this 15-minute zone, again we fine tune to 5-minute zone. You draw it type 2 proximal entry. Now exactly it fit inside the 15-minute zone. So this 5 minutes high liquidity zone is a very good choice for us to plan our trades, because this is a 5 minutes fine-tuned zone, and this fine-tuned is also a high liquidity zone. So such kind of trades we should not miss if prices come to this zone. Exactly the same way, this 5-minute supply zone is also a fine-tuned zone. Definitely one of these zones should work. Fine-tuned zones are having more success rate. But remember, the fine-tuned zones inside high liquidity are having more success, 80% success, and these zones you may expect up to 60% success. In a normal, this is a normal daily demand zone and 75 minutes demand zone. This is also a normal daily demand zone. But 75 minutes is high liquidity but low priority high liquidity. But if this daily demand zone would have been a high liquidity demand zone, or even this daily supply zone would have been a high liquidity supply zone, then we might be having up to 80% success. But anyway, you can't expect these fine-tuned zones, at least you can expect up to 60% success rate. Please remember. So now we have completed the analysis. Let us draw the ranges. The ranges are very clearly visible now. The support and resistance levels. Between support and resistance, I am drawing the zone range using info line. This could be the first range. Sorry. Let me keep it up to 5 minutes zones only. This is the first range. Second range is between daily zone to daily zone. Let me draw. The daily supply zone to daily demand zone. I am drawing the next ranges. Probably this week, the range will be like this. This is the proximal distal line of daily zone. This is the distal, but below you have 25 minutes high liquidity zone is there. Inside you have a fine-tuned 5 minutes is also there. Inside this 25, you have to find this. See, I am seeing a rally and some 2 or 3 base candles are there. Again a rally. But definitely this week the range will be within this area unless this supply zone is violated. In case if the supply zone is violated, Nifty will go to all-time high. If this is holding the prices, Nifty will be moving within this range only for some time during this coming week. Hope it is clear to all you people. Hope this analysis will be helpful to you for your further study and analysis. Let us all meet again in our next video. Thank you.